Hello, I'm London. I'm back with another video highlighting a company I think that will run 2026. Now, this company did great in 2025 and in 2024 previously when we were hearing about this whole semiconductor boom. But this company is truly monopolistic. The company here is TSM. Now, before I get into the video, I do wish to put out the standard disclaimer. I'm not a financial advisor. You should do your own research. You should consult a professional. I include no tax advice. This is solely based off my own thesis. You should build your own thesis. And this is what my viewpoints on this company are. Consult a professional, please. Now, you've heard about this company. It's a global chip manufacturer, currently under heavy pressure from China. Scrutiny on building American-based facilities. We've heard about their billions of dollars investment into United States infrastructure. I believe it was $165 billion committed throughout 2026 to build out plants, and specifically in Arizona. So, what do? They manufacture semiconductor equipment for devices, your phones, your computers, your cameras, your cars, your smartwatches. Anything technology oriented houses a special processing chip in it. This company creates that chip. Now, it's involved in manufacturing, it's involved in research, designing, but primarily manufacturing the chip itself. Really, no other company can do that. And if you leave it to a simple Google search, if you look up TSMC competitors and you just scroll down a little bit, you see Samsung. It's got it beat. You see Intel. Intel is an extremely outdated company, just can't get it done. You see AMD. It's gaining market share, but it's not as monopolistic as TSM. Broadcom, Qualcomm, Micron, Lam. You see a lot of other chip manufacturers that simply don't get it done like how this company does. So when we take a look here at Taiwan Semiconductor fourth quarter 2025 results, we see, again, NT is their form of currency. This is not ours. They do not have basically $1 trillion worth of earnings. But we see here that fourth quarter revenue was 33.73 billion, which doesn't seem much. But when you look at the year over year, 25.5% year over year increase, 1.9% from the previous quarter. That's a great growth. That's a great growth aspect. Again, that means basically from last year to this year, they increased 25.5%. Now, gross margin for the quarter was 62.3%. Their operating margin was 54%, and net profit margin was 48.3%. That means they're keeping a lot of the money that they put out. That's great because they can either return it to the shareholder, they can reinvest it back into their company. They have a lot of options to do with that capital. Now, I do want to highlight, when a company has a high net margin, that can be a good and a bad thing depending on what the company does with that money. Now, you see the blue chip companies, they give that money back through their dividends. And you see the high growth companies that really don't pay dividends, they invest it into their company to keep the momentum going. This can be a good and a bad thing. Now, in the fourth quarter, shipments of 3 nanometer, that's their chip, accounted for 28% of their total wafer revenue. 5 nanometer, 35, 7 nanometer, 14. Advanced technology defined at 7 nanometer. So 77% of their total wafer revenue. That's still great. Their outlook for the first quarter of 2026, which is in February, I believe, 34.6 billion and 35.8 billion, between that number. I believe they're going to beat. I believe they're going to significantly beat because, again, the demand for them is going. Now, enough of that. We're going to look at how it reacted. So this is news from Blossom. I recorded this as well. The stock reaction, it heavily impacted the whole sector. We saw ASML lifted. Not only TSM, which was lifted 5.47% in pre-market, and on the day it rose around 5 to 6%. But we saw other companies, Nvidia, AMD, Micron with huge gains. We saw a lot of data center stocks with huge gains because it was renewal in the AI trade. The NASDAQ was lifted ultimately because of what this stock did. Now, 52 to $56 billion of capex to expand capacity. Again, the investments in infrastructure in the United States and where their founders are in Taiwan to continue that growth of their company. When you look at capex, you have to look at where they're allocating this capex towards. Now, a big example of this can be Meta. People have questions what Meta has been doing with their capex, where they've been allocating it towards. $72 billion into the metaverse. I don't really support that, but the stock is trading at a premium, at a discount towards their premium. Because of that, thereby. But this is about TSM. Now, a lot of capex going into their infrastructure. That can be a good and a bad thing as well. But with this company, they're so mission critical that they have to continue investment into their capex to become a better and better company. You don't even have to leave it to the earnings itself. This company is truly revolutionary to what it does. Now, they went on a stalemate when I bought in. I was here around September. They went on a little bit of a stalemate. They've stalled, but recent growth with their earnings has just shot the stock up. I believe this will continue. This trend will simply just continue going. Again, not simply just because of what it does, but because of how mission critical it is to the whole economy, the whole world economy. Damn near every company relies on TSMC to manufacture chips. Like I've said in a previous video, it doesn't matter if Google is winning the AI race. Nvidia, AMD, it doesn't matter if they keep battling it out. This company will sell to any and all companies that have demand for the chips. So again, if Nvidia owns 80% of the market share, AMD owns 20%. If that were to swap and AMD were to then own 80%, Nvidia were to own 20%, they're still going to sell to them. They're still going to make their revenue. They're still going to be critical. There's really been no significant slowdown in what they do. And again, it's not just what they do that makes the company so important. It's how they do it. Again, there's many other chip manufacturing companies like Intel, but they're significantly lagging behind. They're so far behind this company. The only thing that limits this company is that it is based in Taiwan. Taiwan is obviously under heavy scrutiny from China. You've heard it all about the China invasions, the tariffs, etc. That's the only thing about it. If this was a domestic company like Intel, this stock would be over $600 easily. Now, my price target for 2026, I'm not a financial advisor. My price target for 2026 would be above the 450 mark. If we see the whole AI sentiment keep going up, if we see demand keep going up, if we see earnings keep going up, if we don't see any wishy-washy business with Taiwan, and if we see significant more investment of this company into the United States infrastructure, this stock will go parabolic. Now, I've called it in a short video I did before earnings. I said the stock will be earnings and it will pop. Well, the stock popped 5% on earnings. And if you look right here, that is actually when it did. One of these days, it shot up crazy. Again, you know this company is going to continue producing, but people are so scared because of how it's associated with Taiwan, the tariffs, etc. They'd rather look at a company like Intel that's domestically based, that's backed by the United States government. Again, the 10% stake it has in Intel, they're not going to let it fail. They want their money. That's really all they're scared of. TSMC is a great company. They run a great gross margin, their operating margin. Their guidance was a little shaved, but it's growing. It's growing a lot. That's a great growth in their guidance. And they don't really trade at that high of a PE ratio. 31. Now, compared to the whole ecosystem, that number would be around 40s to 50. They have a huge market cap, a $2 trillion market cap. They're in the top 15 for market cap. Their dividend is okay for a significant growth company. That's a great yield. And they grow their earnings. Now, again, how are they monopolistic? You have to think, if this company were to fail, there'd be a huge vacuum. This company is so important to Google, to Broadcom, to most of its competitors. TSM is actually important to, because it helps them in some way. Now, Broadcom and AMD aren't really direct competitors, because ultimately the only direct competitor with this company is Samsung and Intel. But it's just so important. It sells directly to its competitors. Last year they ran up 46%. I believe that will be the same case for this year. If growth doesn't stunt, if the company keeps compounding, this stock will continue trading high and going parabolic. Now, with that being said, I hope you enjoyed my highlight of the most indestructible company of 2026. Now, obviously, there are a few other indestructible companies, but this is my personal pick for 2026. The established, indestructible, moat, growth, kind of safe haven company of 2026 that I would go to as an investor. This is not financial advice. I hope you have a great day and continue investing.